The COVID pandemic's caused a lot of disruption and uncertainty for multinationals around the world. And look, it's in these sort of times where guidance and direction are the most valuable. We know there's been limited guidance out there to date, but the ATO has in fact published some guidance on its website. So in relation to the first piece of guidance, the ATO has recognised that there's an absence of reliable comparables or benchmarking data at present, given the lag in the disclosure of financial data for comparable companies. As a result, the ATO has outlined that taxpayers can adopt a but-for test in relation to this period. And in essence, what that means is that the ATO, in reviewing transfer pricing outcomes that have been affected by the COVID pandemic, will look to understand what the impact and what the financial outcomes that the business would have achieved would have been but for the impact of COVID-19. And in doing this work, the ATO looked to do a number of analyses, including looking at the profit and loss and any variances that have been caused by the pandemic, including looking at budgeted versus actual results for the period or for the year, the rationale around any additional costs being allocated to the Australian business from overseas, any revenue reductions for the Australian business, and of course the evidence of the treatment or how the business has treated any government subsidies received or the impact of government intervention on the business. And it's worth noting also that the ATO have published a notice flagging that they'll be reviewing certain tax advantages gained through changes in related party agreements in light of COVID, with the purpose of this to assess whether any such changes adhere to Australia's transfer pricing provisions and other anti-avoidance rules. So in relation to government support, through two simple examples, the ATO has made it clear that the JobKeeper subsidy, in Australia's case, should not be taken into account in calculating the reward payable to Australian intra-group service providers. The ATO has outlined, in effect, that the benefit of the subsidy should not be passed to offshore-related parties through transfer pricing adjustments. Now, we note that the examples that the ATO have used do relate to intra-group service provision, so it'd be good to see some other examples in the future dealing with inbound distribution or other managed margin scenarios within the group. So in relation to existing advanced pricing arrangements, the ATO has noted that the impact of the pandemic could result in a breach of critical assumptions that have been agreed to. In those cases, the ATO has encouraged prompt and proactive engagement as soon as the taxpayer becomes aware of a potential breach. This could ultimately lead to the APA either continuing to operate as usual, being renegotiated, or being suspended or modified for a set period. Now, in relation to taxpayers who are currently in the APA process but haven't yet agreed to an APA, the ATO has noted that it will continue to work on the application. However, if there's great uncertainty, the ATO will consider placing cases on hold and potentially ending the APA process by mutual consent. So while there's been some guidance provided, taxpayers are undoubtedly looking for further guidance from tax administrations, including around the impact on financing arrangements and implications relating to risk assumption and managed margin entities. It's clear that multinationals should ensure they maintain robust and contemporaneous documentation to ensure that their transfer pricing positions in this environment are well documented. This should include evidence to support key assertions on which transfer pricing outcomes are likely to turn, particularly in light of the ATO's but-for test. This will be critical as we anticipate the approach taken by multinationals in relation to the COVID years will be subject to tax authority scrutiny in the future. Accordingly, multinationals may also consider whether to take a proactive engagement approach with tax authorities. This is obvious for those multinationals with advanced pricing arrangements, but it may be worthwhile for others where any changes or impacts on the business are significant and material.